Hey everybody, welcome back to the channel. We are back on another episode of the Daily Recap. This week has been quite the week in the global capital equity markets. We do have some headlines today that I want to cover. Monday and Tuesday, today's Wednesday, have been pretty wild. We got the China trade deal kind of announced on Monday. It was the beginning of a negotiation of what a trade deal could look like. That really got the markets to feel more comfortable with taking a risk-on approach to equities. Palantir hit all-time highs yesterday. Nvidia was able to get to 135 today. We had a bunch of other things happen today that I thought were pretty unique in terms of understanding the macro and certain individual equities. For example, Jim Chanos, notorious short seller on Tesla, he's back. He's not shorting Tesla, but he has some concerns around Tesla, the business. We'll talk about that. Tesla was up 4% today. We'll also talk about why Tesla gapped up 4%. Number two, Palantir closed at $130, which was really nice to see on Palantir. Again, the momentum and the normalization of these triple digits looks like it's starting to happen, which is going to be very nice for their overall trajectory. Grab, a company that I'm quite fond of as well. I know a lot of you guys know about the company. Got a 4% gain of the day, closed above 525, which was very bullish for Grab. And then Nvidia, SMCI, the entire semiconductor ecosystem got another pump today, including a fan favorite, AMD. I know a lot of you guys love AMD. I don't have a position in the stock. I'm heavy in Nvidia, but I love Lisa Su. AMD, I think it makes a lot of sense. $6 billion buyback was announced today. That stock was up about 5%. So we'll talk about the implications of what happened yesterday in Saudi Arabia, the overall AI investment landscape, what it means for these semiconductor stocks, what it means for the AI stocks. And we got some bond yields that are rising. The 10-year, the highest it's been in 3 months. That is not the best thing in the world. So let's talk about how we're going to navigate it. Thank you, everybody, for being here. Let's get into it. All right, so let's start off with Tessie. Tessie is going to be the first story of the day. Tesla, I call it Tessie. I have a Tessie. It's called the Miracle Whip. Shout out to the person in the chat, I think 3 months ago, that recommended I should name it the Miracle Whip. I don't like mayo. It's white. It's white on white. And so they said, hey, why not the Miracle Whip? I was like, technically not mayo. I like it. So that's literally what it's named on my phone in the Tesla app. Tesla was up 4% today. Now, why was Tesla up 4%? There's two reasons. Number one, Elon Musk tweeted this video last night that's playing right now on the screen, as you can see, of Optimus dancing, the Optimus robot dancing. Tesla stock gapped up about 4% last night, and the pre-markets was up again, kind of lost all that momentum, was at 338 during the day, and then got to 350 at one point. Now, it hit 350 literally for a millisecond, and then that 350 was gone. But it did hit 350, and I think it ended the day at around 347. So why was this so unique? I think if there is a world where Elon Musk shows off a purchase order or a letter of intent from a Walmart and Amazon, a big company that says, hey, we would like to buy 100,000 Optimus bots, the street's going to have no idea how to calculate that into their valuation metrics currently right now. And as a result, that could be something that the street's waiting for in order to help them better understand and justify what the growth story is on Tesla. Farzad, big fan of him. He's a big Tesla YouTuber as well. He commented under my post last night, forget Walmart. What if the Kingdom of Saudi Arabia wants to order 1 million robots? Elon had a very friendly discussion with the kingdom over the conference. This is a 20-second clip of what he talked about when it came to robotaxis. So you can look at this right here.
So how are we doing on robotaxis?
Yeah, so really you can think of a car or future cars as being robots on 4 wheels. And, I think it would be very exciting to have autonomous vehicles here in the kingdom.
Indeed.
If you're amenable.
You heard it here from Elon. He's bringing his robotaxi to the kingdom.
Yeah.
So the demand is there. The question's just going to be where that demand can be substantiated. Now, someone that does not believe in the robotaxi story is Mr. Jim Chanos. He notoriously shorted Tesla in 2016. He was bearish in 2013. 2016, he established a short position. His fund went from $8 billion under management to $200 million because Tesla stock went from 2015 to 2021 up 2,200%. And that kind of wiped out the short position. So here's what Jim Chanos had to say about Tesla.
A company whose earnings are declining, its revenues are declining, its valuation is increasing because investors are pointing to robotaxis, autonomous robots, and then I joked this morning, asteroid mining by robots. I mean, the stories that keep building onto this company as people put hopes and dreams on back of one company and one entrepreneur, quite frankly, are just, sort of getting excessive. And we can definitely see the profits are dropping, unit sales are dropping, margins are coming down, and yet people think that robotaxis will be amazingly profitable and that we're all going to have a robot in our backyard doing lawn work, whatever. The reality is we might, but it might very much look like the car business itself today. lots of vendors, commodity business. Buy a robot for $30,000 and the manufacturer will make $3,000 on it.
Now, look, my perspective here is pretty simple. Obviously, Tesla is expensive as a company if you evaluate as an auto company. There's no kidding about that. But, I feel like this debate is just becoming so old and repetitive. Like, it's not an auto company. And you could believe it's an auto company all you want, but I think even the smartest of people that have been bearish on Tesla are acknowledging there are so many parts to this thesis, so many parts of the story when we think about energy, robotics, FSD, et cetera. So many growth vectors. There's a reason Tesla gets its multiple and Microsoft doesn't. Now, Microsoft's more valuable than Tesla, but do people think Microsoft can be a $6 trillion company as easily as people think Tesla can be a $10 trillion company? I know it's kind of crazy to say $10 trillion company. Tesla's at $1 trillion, Microsoft's at $3 trillion, but I think part of Tesla's multiple is that people actually believe in Tesla. They believe in the story of Tesla. They understand why Elon is so motivated to grow in the way that he's growing or how he's architecting a landscape, even if his timelines are a bit off on getting to that growth. And that is why Tesla trades the way it trades. In fact, Anduril founder Palmer Luckey had a great clip talking about Tesla investors and how he hopes to build an investor base similar to Tesla investors when Anduril goes public.
A lot of people imagine that if Anduril goes public, we'll become like other public defense companies because the less risk, not willing to invest in the future, paying out dividends rather than investing in R&D,
maximizing quarterly returns.
But that doesn't have to necessarily be the case. Tesla has an extremely high price to earnings ratio. Mm-hmm. Why? Because their investors believe that they are going to win across the board on a multi-decade timescale. They think they're going to win at robotics, they're going to win at energy, and I think they have a very good shot at winning on all or most of those items. And you could ask yourself, well, wait, what? They're a publicly traded company. Why aren't they like one of the more traditional automotive companies? Why weren't they forced to be more like a traditional company? And the answer is simple, because they've cultivated an investor base that believes in what Tesla is. Mm-hmm. They've repelled everybody else.
So look, from that perspective, it's just a question of how you engage in understanding Tesla. In my perspective, yes, it's obviously expensive and I'm a lot more heavier allocated towards Nvidia just because the numbers right there make a lot more sense to me in terms of where I see the growth curve coming from. I do think though, if you're buying Tesla at these elevated levels, you're not buying it because of Q2 earnings or Q1 earnings. Q2 earnings probably not going to be the best. Deliveries might not be the best. Yes, there's some brand damage issues, all that stuff, but you're buying it because you believe there's a world where 1 million robots will be walking the face of the earth and they'll be built by Optimus. And that's going to be part one of 1 billion robots one day walking the face of the earth. You think there's going to be 1 billion cars that are going to be driving people across the entire world without needing to have a driver. If you believe Tesla is going to win in those circumstances, then at the end of the day, I think you're more bullish on Tesla than not. Okay, next update is on Nvidia. Nvidia got to 135 today, folks. It's very exciting to see this happen in real time for Nvidia. Again, this stock is still less expensive than Costco and Walmart, even at these levels. It was a stock that was at $6 at the lows of April. Currently right now, wow, 136. I'm recording this after hours, so you got 136.05 on Nvidia. So you are gapping up a little bit after hours. Now, why is Nvidia gapping up? Well, CoreWeave, they had earnings today. CoreWeave's actually down, unfortunately. They were up about 12%, but CoreWeave, they're down about 1.6%. They were up 12%. The reason they're down is because they said in their call that their capex is going to be $3 to $3.5 billion, which is 3x their annual quarterly revenue. And this is just their Q2 capex. So their Q2 capex is going to be 3x their revenue. They have a backlog of like $20 billion, which is incredible, right? Great business, amazing infrastructure, data center play. It's obviously going to be very important for Nvidia and all the other data center stocks like the VSTs or the VRTs, VSTs, all the semiconductor plays. So CoreWeave's kind of like a proxy on understanding how much demand there is for the renting of GPUs that they put out into the world. But it's an expensive business, right? Like you have to buy the GPUs. Like there's a lot of capex involved in that. So from that perspective, I think that the CoreWeave earnings is a nothing burger, and the street's reaction to it is whatever. Stock IPO'd at 45, it's at 62. I don't think it's that important, but it does indicate how much demand they have. And given that much demand, given how much they're spending on capex to be able to fulfill that demand, it all comes back down to Nvidia. You know, I've been speaking to people recently about how bullish they are on the data center space or the semiconductor space or just the overall AI landscape, the AI trade, understanding Nvidia being the backbone of the architecture to manifest how that trade plays out. And for some reason, they don't end up buying Nvidia. They buy any of these derivative AI plays that, you know, will benefit from Nvidia having top line growth, but they don't buy Nvidia. And to me, it's always surprising because you can have some like valuation arguments, I guess, to justify why you think something else could be a better bet than Nvidia. But if it all depends on Nvidia, And the valuation stuff becomes ironic because Nvidia's valuation is still cheap right now, and it was definitely cheap over the past 2 months. No one can argue that Nvidia was some expensive stock that's out there compared to other names that exist. I feel like the answer ends up being Nvidia. My conviction on this name is growing so much. It is now a top 3 holding in my portfolio with Palantir and Robinhood. I just think that they're going to be the winners in an AI race. And as a result of being the winners, it's going to be very hard to see Nvidia not end up being the company that not only ushers in this new revolution, but is also able to get people to see where the world is going. Because I do think some people understand where the world is going, but there's a lot of investors, obviously, we saw over the past couple months that have discounted Nvidia because I guess they didn't believe where Nvidia was going. Speaking of Nvidia, they put out a letter today to shareholders. It's titled, Dear Nvidians and Stakeholders, a new industrial revolution is underway, transforming energy into artificial intelligence. The factory of this industrial revolution, an AI factory, is powered by computers created by Nvidia. It's a pretty long letter. I'm going to leave it in the description, the tweet to the screenshots of this letter so everyone can read it. But they talk about full stack end-to-end AI infrastructure, operational scale and disciplined investments, engineering for continuity from perception to physical intelligence. They talk about the operating system of AI factories, a full stack platform for scaling intelligence. They talk about Blackwell, post-training, inference, what's next after Blackwell, like Ultra and Rubin. I mean, this is a company. And I would recommend everyone read through it. It's too much for me to read right here, but I'll leave the link in the description. Everyone should read through it because if you're an Nvidia shareholder or you're just trying to understand the broader AI thesis, Nvidia is telling it to us and they're not hiding anything. And it's just a question of, do you believe that they're going to be able to grow and this is not going to be as cyclical as some people thought? And I just like, the cyclical thesis, even I was a bit more bearish on, at least I would say 7 to 8 months ago. But the more I think about it, the more I'm like, where's the cyclicality here? We just talked about robots. All those bots, billions of them, are going to have Nvidia chips. ChatGPT 7, 8, 9 until we get to AGI is going to need massive amounts of computational infrastructure. And NVIDIA, particularly with their CUDA software, has a real competitive advantage and moat that simply can't be replicated when it comes to actually building, designing, and then architecting the chips that enable the computation that allows a reasoning model, for example, or a DeepSeek to actually give the value that it gives to the marketplace when it comes to consumers using those models over other models. So look, from that perspective, bullish NVIDIA. We'll keep covering the news. They got a lot of investments from the Kingdom of Saudi Arabia yesterday in terms of commitments, and I just don't think that the story is slowing down anytime soon. Having said that, we talked about NVIDIA. Let's talk about AMD. Let's talk about AMD. AMD I've covered on the Market Open and Market Close many, many times. I know a lot of you guys are fans of AMD. I have not really discussed it on the daily recap, but I think we should today because AMD stock at one point got to 122. AMD right here is at 117. It was up 4.19% on the day. The thing about AMD is I think a lot of people started buying it at 150. Now, why did a lot of people start buying it at 150? Well, it fell from 225. I remember watching that happen back in March of 2024. And at 150, people were like, all right, this is my discount, right? I've been waiting to get into AMD, generational company, Lisa Su. Yes, maybe it's second to NVIDIA, but still incredible company, incredible execution. I deserve to take a position in this. That 150 turned into like 85 or something, and it really couldn't catch a break. Even their latest earnings were good. They weren't like phenomenal earnings, but they were pretty decent earnings. They guided for Q2 data center revenues to be flat to negative, and I think that's what really got the stock to still be stuck at that $97 range. But even at 97, 98, 99, 100, 105, I think everyone knows AMD is probably undervalued. Now, what did they say today that got the market excited? Well, they said, hey, we're buying back our stock. $6 billion of a buyback. That is going to include the $4 billion they've already authorized. So now they have a total of a $10 billion buyback. The street absolutely loved it. As soon as they announced that in the pre-markets, the street got excited. This is in addition to the Kingdom of Saudi Arabia investments they got. We don't know exactly how many chips they're going to be selling into Saudi Arabia, but Saudi Arabia is going to be building multiple data centers. AMD is going to be achieving some investments from the Kingdom of Saudi Arabia to provide them the chips and the infrastructure to be able to build those data centers along with Nvidia. That's why Lisa Su was with President Trump in Saudi Arabia yesterday. And the reason this is so important is because, again, AMD it's not like they're not growing. They are growing. They just aren't growing as fast as Nvidia, which is why they always get compared to Nvidia. And NVIDIA's, as a result, NVIDIA's multiple ends up looking a little bit better than AMD's because of the faster growth rates. But that doesn't mean AMD's not an important company. In fact, Meta's raising of CapEx from 60 to 65 billion to 62 to 74 billion actually implies a lot more money going to AMD because a lot of Meta's inference training runs on AMD. So from that perspective, it's just a question of, hey, do you believe that both of these companies, AMD and NVIDIA, are going to be relevant over the next 5 years and be much bigger than they are today? Maybe NVIDIA is going to be bigger. NVIDIA is obviously bigger right now, 3 trillion versus AMD's at 200 billion. But still, That doesn't mean that AMD is not going to be an incredible company. Now, why are the buybacks so important? Well, when you buy back your stock, it's something very important to understand. If there's 10 shares of a company and I own one share, I own 10% of the company. If you buy back the stock and you buy back 50% of the shares, so you buy back 5 out of those 10 shares, and I still own 1 out of the remaining 5 shares, I own 20% of the company. So buybacks allow shareholders, you and I, that own parts of the company, to own more of the company. And as a result, if you can take away some of the shares that are outstanding and you take the earnings and you divide it by the number of shares, it becomes more in terms of earnings per share. Your net income ultimately goes up per share. So if you have $1 billion of profit and 1 billion shares, you have $1 per share. If you have 500 million shares, because you buy back 500 million shares, you have $2 per share. Your net income stayed the same at 1 billion, but your earnings per share increased by 100%, which is pretty damn incredible. AMD committing to the fact that they think from basically what the price is today, 115, they are agreeing that they are undervalued and they are ready to buy back their stock, along with them being able to show the growth, I think is a sign to the market that, hey, we've kind of disrespected AMD for a while for whatever reason we've had to disrespect it. But if they feel they're undervalued and they're willing to commit $6 billion, which $10 billion in total, to buy back their stock, maybe we should take another look at it. And I think that's why that stock was up 4% on the day. The other reason the buybacks are so important is because most companies that initiate a buyback have stopped growing for the most part, right? But a lot of the tech companies in the modern era have gotten so big and they're still growing, even if it's not like 30, 45, 50% growth. But Meta's still growing 20%, Google's still growing 15%, Apple's not growing at all. Apple's kind of manufactured their earnings per share for the past decade based on buybacks. But we do have a lot of tech companies that are saying we are growing so much and we have so much free cash flow and so much net income, we kind of don't know where to invest it. The bear case to buybacks is that you're buying back your stock because you don't know what to do with the money, which means you don't know how to invest in order to grow. That's why Tesla's not buying back their stock. They have 40 billion in cash. They want to continue investing that cash to grow. But the bull case is if you're growing like Robinhood's growing at 50% year over year, and they're still buying back their stock. It is very rare when a company is growing and buying back their stock because they're delivering you top line growth, which is what you care about as a shareholder, right? You want to invest in assets that can grow. But then you're also getting rewarded for being a shareholder by having some of those shares outstanding leave because the company is retiring those shares, which means your actual ownership of the stock in and of itself increases by a percentage basis. So I think AMD committing to do this is just super bullish and it makes a lot of sense. And as a result, Lisa Su was able to get that stock higher about 5% on the day. Congrats to all the AMD bulls. All right, last couple of headlines to end out the day. So 2 things. Number 1, Tom Lee's Granny Shots ETF, ticker symbol GRNY, has officially included a Robinhood. Super cool. We got Tom Lee to see the bull case in Robinhood, and that Granny Shots ETF, which I believe now has $1 billion assets under management, is now including Robinhood. It also includes Palantir, which is really nice. So he has Palantir and he has Robinhood. Number 2, Ray Dalio's Bridgewater's buy and sells came out. We're going to be getting a lot of 13Fs and 13Gs. I will be bringing all that data to you guys, and we'll be talking about the different companies that people are buying and selling on Wall Street, especially some of the big names like the David Teppers, Stanley Druckenmillers, et cetera, of the world. What were his top 5 buys? Baba, Baidu, which is the Chinese Google, Gold, Bookings, and Palo Alto Networks. So he bought a lot of China and a lot of gold, and then we got some cybersecurity. His top 5 sells: the S&P 500, Google, Nvidia, AppLovin, and Meta. Loaded up on China and gold, reduced exposure to big tech. This makes sense for Ray Dalio. He has had a thesis that China is going to overtake the United States for a long time, so it makes sense why he's allocating his capital towards China. But he did reduce some of the exposure to big tech. Now, he still has Google in the top 5 holdings of his fund. He has the S&P 500, so he's not like out of America. But you can tell in Q1, some of these large money manager people on the street reduced big tech exposure and they loaded up into safety plays like a gold or like a Baba, which is incredibly undervalued. But the major risk to Baba is that, the CCP kind of controls them. Now, I'm curious if he bought back in, because what we've been talking about on the show for the past couple of weeks is that the 2Ds, the institutions, they've started to de-risk their equity positioning, and they kind of de-risk near the bottom, or at least close to the bottom, because of the tariff volatility. So if Dalio in Q1 started selling Meta and Google and AppLovin and all these companies as they went down 30 to 40%, I'm curious if he's buying back in. And I'm also curious if some of the other big hedge fund people, David Tepper, Stanley Druckenmiller, et cetera, did they reduce their exposure in Q1? There's always a delay between each quarter when we get these 13Fs, 13Gs. But if that's the case, then it is unequivocally true that a lot of the institutional money guys, they just got scared. And retail was probably scared, but retail ended up buying the dip. A lot of these guys manage a lot of money. They probably got very scared about what was going on. They probably thought Trump was actually not lying about the 145% tariffs. Most of retail realized that it was stupid, but he probably wasn't going to keep those tariffs on forever. I mean, I think I remember saying on the show every day in April, I just think these tariffs are going to go away. At one point when China, it was a Friday morning, China was like, oh, we're going to do 125% tariffs. And I was just like, this is a joke at this point. This is a joke. This is obviously a joke. These are being toddlers right now that are yelling at each other. Like, this is going to inevitably stop. So we just need to allow it to stop. And it did. And as a result, retail got to buy the dip. So we're going to get a lot more data on the institutional money managers and what they did. But as of now, this is the first piece of data we have on Ray Dalio. And then final thing I wanted to touch on today is, well, two things. Grab closed above 525. I don't think that's retail. I think that's institutional. Most people don't know what Grab is. Grab is a name that is very under the radar. I think I'm like the only YouTuber that actually like talks about this. There's maybe a couple other people that made a video here and there. So Grab up 4% of the day. Very excited about that. Broke above 525. I think we closed at 523. Nice to see getting some of that momentum, and hopefully that can continue as well going into the latter half of the year. I think there's a lot of upside for this name, but I think retail is going to chase it when it gets into the 750 type of range. Institutional ownership is 83%. So the toots are already in, and I don't think they're going to be chasing this name when it actually begins to run. Finally, I wanted to talk about is Fear and Greed Index. Fear and Greed is at 71. So quick kind of idea right here. Are you selling into the strength? I would love to know in the comments, are you selling based on some of the momentum that we've seen? I think there's 3 reasons to sell. Very simple. No rate cuts are coming. If you believe we're not getting any rate cuts, probably should sell. Number 2, markets are getting euphoric. If you think markets are getting way too excited, probably should sell. And number 3, if you really want to take some profits, taking profits is healthy, you could probably sell. Reasons not to sell, which is kind of what I'm doing right here. More trade deals are on the way. I think this is inevitable. We're going to get India, China, Japan, South Korea. Those trade deals are going to compound, and the market's just absolutely going to love it. It's going to reduce the tariff volatility as well. So that'll be a reason not to sell. That's a reason markets could go higher. Number 2, inflation's coming down. Whether Jay Powell cuts or not anytime soon, he will be blamed if he doesn't cut because rates are coming down. So as rates come down, I think, or as inflation comes down, he will inevitably have to bring rates down, which will be bullish for the broader market, definitely bullish for growth stocks. Number 3, AI investment is only accelerating based on what we saw in the Kingdom of Saudi Arabia. You're getting a lot of momentum. I mean, SMCI signed a $20 billion multi-year deal with DataVault, a memorandum of understanding with that company to provide liquid cooling technology for their GPUs inside of data centers. SMCI up 15% on the day. So I do think we're getting a lot more momentum in the context of AI investments, which is obviously big for semiconductors, Nvidia, Palantir, all those big names that care or that are allocated in the AI space that investors care about. And then finally, the other last reason not to sell. The Toots missed it, and they're only going to push us higher as they buy back in. If you believe that the Tooties missed it, which it looks like they did, and they're going to have to buy back in because they missed everything that happened, then yeah, we're probably going to start to see a little bit more momentum from institutional investors that cannot afford to be on the sidelines. So I would love to know people's reasoning on if they are selling or not selling into the strength. I personally think there are some more reasons not to sell. What am I doing? I'm selling covered calls. So I'm selling the upside volatility. I'll manage them as I have to engage with them, but I just don't want to sell my Nvidia. I don't want to sell my hood. I don't want to sell my Palantir. I don't want to sell my Grab. I want to be able to benefit from assets compounding, which is the whole point of being an investor. And in the short term, I will benefit from the volatility by selling the upside to people that want to buy those calls. But I don't think it's a market personally where you get out of it just because you had a great run, because then you have the time getting back in. And I just don't know if the S&P 500 goes back to 5,000 now that we're at 5,800. So those are my thoughts. Thank you, everybody, for being here. Thank you, everybody, for listening. Let me know how you are navigating your portfolio during this time. And thank you, everybody, for listening to the Daily Recap. I'll see you all tomorrow.